Ladies and gentlemen, good morning. Thank you for joining HansaMatrix Investor Webinar. Today, our hosts are the CEO of HansaMatrix, Jānis Sams, and the Management Board member and CFO Māris. As always, we will start the presentation on HansaMatrix and its associated companies, Lightspace Technologies business update, and then we will continue with a live Q&A session. If you'd like to join the discussion and ask your question to the companies, please use the Q&A section that you can find underneath the presentation. Gentlemen, the floor is now all yours.
Thank you, Eva. Good morning, everyone. Thank you for joining for HansaMatrix Nasdaq webinar for Q4 12 months results of 2022. So today we will review the business, operational, and financial highlights. After CFO Māris will dive deep into the details of financial results. Before moving to the Lightspace Technologies, we will be happy to answer your submitted questions. But as Eva mentioned, so you can do it as well during all webinar. So yes, the business, operational, and financial highlights. As we all know, since quite a long time, companies like us and other companies worldwide are struggling with the semiconductor availability. And of course, it has impacted us pretty much during last year, through all the year. But we continuously see the improvements in this situation, and if we follow the figures, then the Q4 2022, the decrease of semiconductors has been 14.7% compared to the last year, and that gave us the chance to improve the availability for us. And thanks to the readiness of HansaMatrix team, all manufacturing sites, we were being ready to achieve the record high revenue in Q4. Nevertheless, we see the inflation of almost 21%, and of course it influenced our profitability. The positive thing for the HansaMatrix and for the future is that our order book is continuing to increase. So and now we are resulting into the 24 million euros. So it is plus 26% compared to the Q3 2022. But of course, this positive thing is coming together with the challenges to secure it with the necessary cash flow. Yes, in figures. So the Q4 we did 7.8 million euro. That is historically highest quarter revenue. And as well compared to the Q3, we were being plus 3%. The EBITDA of the quarter was 1.2 million euro, and that is plus 180% year on year. And EBITDA margin will be 15%. So if you remember the previous webinar, so this is quite higher than it was before. As usual, comparison with the peers. So we can see that the HansaMatrix is within top 3 among selected peers by EBITDA margin. And I would like that you pay attention as well to the TTM net profit that is negative is 2.2 million, and there is some explanation below that 1.4 million is losses from associates and 0.8 million euro is the write-off of SIA Zinātnes Parks. So normally this result is not linked to the performance of our core business and operations. Yes, so we saw that our increase in order book is plus 26%, and one of the explanation for that is that we have received a long-term contract with the aerospace industry customer in the revenue amount of 4.4 million euro. And as always I'm saying, so it's good to see that our partners are continuing to have the longer contracts with HansaMatrix. so we can be more secured with our order book for a longer period of time. And normally we should deliver those products starting in Q4 this year and ending with Q1 2025. The next slide is about the investments. We have finished our planned investments, and it resulted to the 700,000 euro in investments in the machinery, and the largest of that has been the X-ray that is used for doing the quality inspections that is required by our customer needs. And as we are continuing to develop other segment, we have been looking for increasing the capacity and capability of CNC, and that's the reason we have been investing in the new CNC turning machine. So both our investments are closed, machines are qualified and ready to run. Yes, and finally, from my side, I would like to remind about the voluntary takeover for HansaMatrix shares. So on February 17, the Baltcup, through the controlled CIMSCO, published voluntary takeover. They are planning to acquire at least 75% of HansaMatrix shares. And yes, and in case of takeover, it is planned to be delisted. And the offered price is 8.5 euro per share. And after the prospect will be released publicly, so it will be another 30 days to apply for this selling the shares. Thank you. That was I think all from me, and I give the floor to Maris.
Thank you, Jānis. I will guide you through in more detail through our Q4 2022 and the whole year financial results. So starting with revenue in fourth quarter of 2022, historically highest quarterly revenue of 7.8 million euro was reached, which resulted in 61% year-over-year increase and 3% increase compared to the third quarter of 2022. This quarter, three main regions generating revenue were Baltic states with 31% of total, Nordic countries with 39% of total, and the rest of EU countries with 23% of total. Services provided to outside the EU countries this quarter were 7% of the total revenue. As you can see, revenue on year-over-year basis was growing in all regions of operations in this quarter. Largest revenue sectors in this quarter were industrial with 52%, data networks with 28%, and IoT with 15%. Other product sector generated 4% of the total revenue. And as you can see, revenue as well was growing in all the sectors. Profitability in fourth quarter significantly improved, which is explained by manufacturing product mix changes towards more value-added products, and also by better component availability. Net profitability was still negative due to real estate investment, one-time write-off, and losses in associates from developing business. And as for the figures, quarterly EBITDA amounted to 1.2 million euro, substantially increasing of around 180%, both year-over-year basis and compared to previous quarter. Net profit was negative and amounted to 0.9 million euro, while normalized net profit was positive and amounted to 400,000 euros, significantly improving compared to losses in previous quarters. And EBITDA margin in fourth quarter was at very decent level of 15%. Going further, a whole year detailed financial results. In a whole year as well, we achieved the historically highest full year revenue, amounting to almost 28 million euro, which was a 27% increase on year-over-year basis. And the increase in revenue is explained by strong order book and some improvements in component availability that we saw actually in Q4 of last year. Going further, revenue in Baltics reached 37% of total, in Nordic countries 31% of total, and in other EU countries 25% of total, while 6% of total volumes were delivered to customers outside EU countries. The growth in revenue in 2022 in Nordic and other EU countries was mostly related to good performance of industrial and IoT sectors, while revenue decrease in Baltics and outside the EU is explained by the global component deficit challenges. Next, the most significant revenue sectors were industrial products with half of total, data networks was 30%, and IoT was 13%. Optics sector generated 8% of total revenue. As you can see, revenue increased in industrial and IoT sectors, and it was supported by growing demand and by manufacturing orders from new customers. While revenue decrease in data networks is explained by the global component deficit challenges. In terms of financial performance, in year 2022, we actually had two good quarters, which was Q1 and Q4, and two quite challenging quarters, which was Q2 and Q3, in which global component deficit was significantly influencing the availability of semiconductors and our ability to manufacture products for our clients. So as a result, 2022 EBITDA reached 2.8 million euro, decreasing 24% compared to 2021, and resulting in a 10% EBITDA margin. Net loss result was 2.2 million and is mostly explained by losses from investments in associates, Zinātnes parks asset fair value changes, and EIB loan provisions. But as you can see, normalized net profit, which shows the performance of core business in 2022 amounted to 400,000 euros, a positive figure. And to finish the trailing 12 months results, the financial figures are essentially the same as we just discussed for year 2022. Revenue 28 million, EBITDA 2.8 million. But here the significant quarterly improvement in business performance can be observed. As you can see, TTM revenue was growing 12% and TTM EBITDA was growing 37% compared to respective TTM figures for the period ended in third quarter of 2022. Yes, and with that, we can proceed with questions.
Exactly. Thank you, gentlemen, for the presentation regarding HansaMatrix. Before moving to Lightspace Technologies, I would suggest that we take one investor question that was submitted before related to HansaMatrix. And it goes like this. What is the biggest risk out for a company not to reach 2023 profitability targets?
So probably I'll take the answer. The risk of course is still could be the same because there could be the potential decline of the orders in Q4 when the safety stocks of our customers will be fulfilled. And of course, we could be impacted again from the changes in the product mix as we have faced in the past. So, but normally the order book we see today seems to be with low risk to suffer on profitability level.
Thank you. Then we have three questions received online. At what level is the EBITDA profitability so far in Q1 2023?
I think that we will not be able to answer during the webinar. That will follow after the official announcements on the performance of first quarter. Mars, correct me.
No, yes, correct. We can comment probably that the good performance is continuing, but of course the numbers will be released as scheduled going forward.
Thank you. For peers, the profitability recovery in fourth quarter was at noticeably higher extent. Any particular reasons why peers have performed better?
I think that overall, all the peers are well-known EMS companies, and actually all of them are facing the huge backlogs and big order books as well for the future. And I think it's more who have been better prepared on the material availability side, who have been able to procure faster, have been able to perform better. So. I don't know any other particular reason for that.
But maybe I would like to also oppose a bit, because I remember that the previous quarter we were doing the webinar, I think we were not in top three based on EBITDA margin. So it's a bit mixed data, I think. So in terms, I think we moved up we compared to the same peers. So this quarter we moved up a bit. I think we are top three now, and in Q3 I think we were maybe one place below that. So it's a bit mixed data. I think you cannot conclude that the peers are really. It depends on from company to company, and also I think largely depends on product mix that company produces.
Thank you. Why optics segment in fourth quarter decreased by 87% year over year? Is segment expected to recover?
Actually, the number of customers in this sector is very low. So we normally have 2-3 serious customers in this field. And if at least one of them is decreasing or postponing some kind of orders, we can see such a result. Actually, what I see for the future is the increase in optics, as we have recently added another customer with a big potential. I see that for the future there should be the increase in optics, or at least recovery.
Thank you. Then we have two questions regarding the planned buyback offering. Quoting, Baltcap is planning to acquire 70% shares. Does this mean that it would be the minimum set amount in prospectus for the offer to be valid?
Normally we need to wait till prospectus will be available. But for our understanding, that's how it is here.
Thank you. For Baltcap to reach its desired buyback goal of 75% without SIA Macro Riga selling, it's not possible. As Ilmars Osmans is today with us, could he please comment on his plans to subscribe or not to subscribe for the voluntary buyback offer?
Hello everybody, I am here. As this is outside the scope of webinar, I won't be able to give answer straight here. but I just would encourage you to do a little bit thinking, knowing Waldkap and myself as being close partners in very beginning of HansaMatrix. Would you think they would go out with the offer, not discussing that with the largest shareholder? But it's your decision, of course, to subscribe, not to subscribe. But not I cannot answer this directly. I thought I said you in this indirect comment to this.
Thank
Thank
you.
you.
Thank you. We're out of the questions for HansaMatrix by now, so we're ready to move on with the Lightspace Technologies, and we have the company's founder, Ilmar Sasmans, with us today. Ilmar, the floor is all yours.
Hello. I see here about our questions about pricing, everything. So Lightspace Technologies. Yeah. Hello everyone who is joining webinar and looking for discussion here. I'll give a very brief Lightspace business update. Next slide, please. Business development. First product. Basically, we reached a point that we already our first reference product been for a while out in the market. At that while is 6 months plus one, and we already have completed some. We received some feedbacks, already seen some bugs that needs to be fixed. That's been done, and we are releasing now first upgraded or second model, which is called 1055. And those will be started to be made like in March. All design are completed, all procurement is finished, and we just making plans to launch it. There are two improvements on the product. It's more light, so more comfortable to wear, and we reduced power consumption. So both KPIs are very important to improve products. So these both are sold with a not fully, but to a quite large extent with this upgrade. Business focus of company have shifted to defense sector for the reason that we're seeing from healthcare companies some cautiousness about market and putting on hold some of projects that we were planning to jointly do this year. And in contradict, absolutely diametrically different approach are defense contractors who send us very sense of, we're seeing from them big sense of urgency, and they are with very big interest discussing with us potential projects that we could launch already this year. So business focus shifted to defense due to urgent product demand. We're already preparing evaluation projects with 4 major defense organizations, both sides of Atlantic. And we are very positive that these will be very soon launched. Of course, there are some bureaucracy related to this sector, but rather than that, everything else is quite looking very positive. Continue medical projects is continuing to continue. There are two projects with large medtechs, and generally from initial production batch heads has been shipped to Switzerland, France, USA, South Korea, Japan, and recently to Austria. It's not on the list here. That was 2 weeks ago. And another interesting development, we've been developing some enabling technologies that is used already and will be used in future models of our headsets, and that's Zebra Prism technology. And we've been presenting that to largest big techs who are working on AR products, and all of them expressed big interest to this technology. So this is good potential for further licensing agreements. And as what it starts of the general business focus, we are going. Originally, our plan was to work on certain models and now we are seeing that we're working mostly with big techs, with big med techs and big defense contractors. Each of them is sufficiently big account for us, and each of them has some specific requirements. So we are currently shifting our model to have these products only as a reference designs, and our business model will be development and production of customized OEM models for each of them. Next slide, please. Fundraising news, that's very, very important in this period. As you are all from investment circles and reading materials and experiencing changes in the market, there are a few changes, fundamentally or critical changes. First of all, SPAC and CPC company market on a Nasdaq and TMX been collapsed. Really, valuations went down to the earth level. So due to that reason, of course, any listing has to be postponed, or any CPC or SPAC takeovers has to be considered with a big criticism, skepticism. And so the same time, of course, valuation of all startups who are not yet in a phase of earning profitability also went down at least 2 times on a market, which actually hurt very much VCs and all investment commune, and that of course for Q4 and 2020 Q1 really stopped investments on a big level. So for that reason, we have to reconsider very much our fundraising path. And from one hand, we have managed to extend bridge round, which reached 3 million now, starting with last year May, and 400,000 euros been added in Q4. And our general plan is to go for private investment Series A later this year, second half of this year. And currently look out for press series or intermediate venture round of 2-3 million euros. Talking to a couple of Baltic family funds for that investment. And if anyone is interested to consider taking that ticket in full or partially, we are welcome. Any interest, please. Underneath there is an email for investment inquiries, which is invest@lightspace3d.com. We welcome any feedback after this webinar. And next slide, please. Okay, as I said, there was a specific question on before the webinar regarding listing process. Listing process been postponed. This is still on a list, but before of that, we need private. We believe private. We need to find private investment. We're talking to a number of funds. As I say, the process been slowed down very much on this Q4, last year Q4 and this year's Q1. However, in March, we are participating in large investment conference in Paris, talking to most of the corporates, most of the deep techs that are active in Europe, and to find the suitable candidates. We are having already with some discussions, but as I said, they've been waiting if the market will not collapse fully or only will start to recover. So no one knows, but I think signals if this will be recovering probably earlier than expected. So this is my kind of currently my message. So any questions? Welcome.
Thank you. In connection to long-term outlook for HansaMatrix and Lightspace potential valuation upon listing on Toronto Venture Exchange, Ilmars Osmans has expressed his view on previous webinars that HansaMatrix is considerably undervalued. Could he express his view on current voluntary offer price? Does it seem to reflect the fair value with slight premium to 2022 weighted average price?
My comment is following that, of course, this is according to market situation, good offer in principle. generally, first of all, period last quarters and last year in Baltic market been not very depressing. Meaning this offer, of course, is premium to last period listed price, which is of course being considered as, I would say, this is kind of quite good. But from one hand, of course, in a good times you could expect higher, but of course seeing how are performing all other markets, I think this is maybe reasonable. I would say reasonable. So no other comments maybe. But this is for, of course, given capital market period. Maybe I remember when I was listening 2016, it was even worse than now. So kind of that's where we are in a region which is not very, I would say, not very lucky, maybe always with a capital offer and limited capital offering. That's my comment.
Thank you. It seems that the mass production is postponed on a regular basis. Is there an issue to finalize the product so that clients are fully satisfied? And do you have a clear vision regarding the mass production schedule?
Yeah, probably this is something is here very much understood. But light space is just a bless me and bless everyone. Well, one more time. Okay. We never expected to be mass market company. What we are looking is B2B markets and B2B customers, which in principle are not mass market. Our business plan is made on the numbers that we are profitable if we are selling 500 headsets a year, and that's not by any means mass production. So we are producing, or we are developing product for two niches. One niche is high-end healthcare market, which is surgical rooms where you require a near distance near to perfect visualization. We are providing that market currently. We already going into it. It goes slow currently. Our top market size for that application would be about 10,000-20,000 units a year. And other one, which is defense. Of course, we are considering the 200-500 headsets per contract, which is again knowing our price is quite large contracts. That's by no means is mass production. We are not trying to satisfy mass market expectations on heads, because mass market don't have any. They don't know what they need. So we are addressing absolutely concrete market segments, concrete use cases, where we are discussing requirements with those who will be users or those who is developing applications for the users, and products are developed specifically for that use case and fully match requirements currently. But you have to understand that for all those applications, one thing is the hardware, another thing is software application elements and data systems that drive those. That requires certain time to develop. So I'm expecting our market will pick up in 2 years. That's my full comment.
Thank you for explaining, Ilmars. We have managed to answer all the submitted questions. Before wrapping up, I'll remind that we have recorded this webinar, and if anyone is interested in listening to the recording, then it will soon be available online. So please follow HansaMatrix announcements to find out more. Thank you for joining us today, and I'm wishing you a very pleasant ending of the day.
Thank you very much, and have a great day.